For anyone in the pension world, you know the core challenge is always the same, right? How do we meet our long-term liabilities when the markets are so complex, so volatile? Well, today, we're going to break down the strategic toolkit that's really starting to reshape the answer to that very question: artificial intelligence.
Okay, so let's dive right in. We're going to look at how AI is being put to work across the three most critical pillars of any modern pension fund. First, the core financial engine, then its operational efficiency, and finally, its human-centric mission.
So, let's start where the stakes are highest, managing the assets that actually drive your returns, and, just as crucial, accurately modeling the liabilities those assets are supposed to cover. This is where AI is having a truly profound impact on the fundamental health of a fund.
This is the fundamental question that keeps everyone up at night, and AI is helping us find a new answer. We're finally moving beyond those traditional kind of static models and into a framework that's way more dynamic, way more predictive when it comes to managing the balance sheet.
Now, what's really important to get here is that these aren't just a bunch of standalone tools. You have to think of them as an interconnected system. The AI models sourcing new alternative investments can feed that data directly into the stochastic models projecting future outcomes. It creates this seamless, intelligent process for managing the fund's financial future.
And this slide really highlights a massive shift on the liability side of the equation. We're moving from being reactive to being proactive. So instead of relying on backward-looking annual reviews, AI models can chew on granular health data to predict longevity trends. They can even model the potential impact of future medical breakthroughs. That gives you a much clearer forward-looking picture of your liabilities.
This goes so far beyond simple market timing. It's about creating a constant, intelligent link between your asset portfolio and your liability profile. So when volatility spikes, the model doesn't just adjust for the market. It adjusts for how those specific changes impact your fund's ability to meet its unique long-term cash flow needs. It's a whole different level of sophistication.
And that brings us, of course, to risk. For any pension fund, capital preservation is paramount. It's everything. These AI models are being built specifically to account for those nasty tail risk scenarios and those correlation breakdowns we all dread during major market stress. They're optimizing for risk-adjusted returns, not just chasing flashy headline numbers.
Generating returns is really only half the battle. Protecting them is just as critical. And that brings us to our second pillar: fortifying the fund with rock-solid operations and risk management. This is where AI becomes the real efficiency engine.
So, what's the goal here? Well, it's all about de-risking the fund from the inside out. It's about automating the routine stuff to slash human error and, maybe most importantly, freeing up your team's valuable time for the higher-level strategic work that really moves the needle.
You can think of AI here as a vigilant 24/7 oversight layer. It is constantly monitoring for market risk exposures, for operational errors, for potential compliance breaches. It's acting as a sophisticated early warning system across all the fund's most critical functions.
Let's just take manager selection. AI transforms this from a periodic, sometimes subjective review into a continuous, data-driven due diligence process. It can parse mountains of performance data to find true alpha, monitor for red flags like style drift, and even benchmark fees to make absolutely sure you're getting value for your money.
Now, on the compliance front, the stakes are just incredibly high. We all know that. You can train AI systems on these incredibly complex regulations like ERISA to actively monitor transactions and flag potential conflicts of interest before they become major problems. This significantly reduces the risk of costly violations and, frankly, simple manual oversight errors.
Okay, so finally, let's connect all this powerful technology back to the fund's ultimate purpose, right? It's about serving its members effectively and empowering its leadership to make sound strategic decisions. This is really where the rubber meets the road. How do we translate all this complex tech into something meaningful? Well, it boils down to using data to deliver personalization at scale and to bring crystal clarity into the boardroom.
So, the applications here are really focused on two key things. One, providing a bespoke, genuinely supportive experience for each individual member. And two, giving trustees the data-driven tools they need for robust, strategic oversight.
Just imagine being able to provide every single member with a personalized advisory experience. AI can analyze their unique career and contribution data to run custom projections. It can even use behavioral analytics to spot members who might be at risk of making a less than optimal benefit election,
which allows for timely, proactive outreach. That's a huge deal. And for the board, this is a total game changer. It shifts the entire conversation from debating opinions to analyzing data-backed projections. So when you're considering a policy change, the AI can model the long-term trade-offs, which enables decisions based on robust scenario analysis, not just intuition.
So you see, it's not about one single application. It's about a comprehensive integration of AI that strengthens the fund from its investment core all the way to its member services. It helps funds operate more efficiently, make better investment decisions, manage risk, and provide, frankly, a superior service to their members.
And this leaves us with a final thought on the future. As these powerful tools increasingly handle all the complex, tactical, data-intensive work, is the role of the pension professional diminished? I don't think so. I think it's elevated. The human focus shifts away from the number crunching and towards what truly matters: strategy, oversight, and judgment.